Good morning, afternoon, or evening, ladies and gentlemen, all in crypto here, and welcome back, guys, for another daily cryptocurrency market update. It has been a magical start to the week, and today is the day that we officially get the CPI numbers for the US, and this, of course, will move markets. We know if the numbers come out hotter than expected, that is going to be negative, and markets will likely see some sort of repercussions from that. And if they come out positive, markets will likely fly. And the cryptocurrency market has already been flying. And isn't it great when a plan comes together? Those of you that follow this channel, and certainly those of you in the Patreon, will be one step ahead of the game. And that's really what we try and do with this content, is help people navigate the treacherous waters that are the cryptocurrency markets. So what are we going to talk about today? We're going to be looking at Bitcoin. We're going to look at Bitcoin dominance. So we're going to be doing a little bit of a technical update. We're going to be looking at Bitcoin, and this is one reason why we actually took punts, along with many reasons, back into the markets at the start of the year. This is Bitcoin against gold. This is Bitcoin against the S&P. And isn't it interesting how Bitcoin against the S&P has broken what is here our sort of 25K neckline? And is this a potential lead indicator for the price movement that we're about to see for Bitcoin? We've also seen GBTC do well. We'll look at dominance. I just want to make a quick point on the fact that Bitcoin dominance is climbing. Now, if you look at how money flows into the cryptocurrency market, usually it goes to Bitcoin first. And the reason being is because big investors don't want to put large sums of money into small, risky altcoins that can dump 50%. They put them into Bitcoin. So this is kind of an indication that potentially it's larger money entering the market here. And we know why markets are doing as well as they are. We had from February onwards a repricing of markets, so implied higher rates, which means markets sold off. And then we had SVB Bank and a number of other banks all come under fire. And the Fed essentially and Biden have came out and said that they'll back this no matter what, which is really a form of QE. You've seen our main metric, and this is Arthur Hayes. That's a savage moment in the 2-year yields. In case you think this is something other than what it is, the bond market is saying it's back to print dat money mode. Don't fight the Fed. So I'm not 100% with him on that. I think the Fed are going to have to try and be a little bit tougher. Certainly if inflation comes out stickier. However, he's on the right lines here. And this is something that we've been telling you guys to watch relentlessly, is the 2-year yields, because it leads the Fed funds. And this is this is the largest drop we've had in a long time. The question is, does it find its feet here or does it continue to drop? You know, you could set up something like this with it, where you do something like that and have a bit of complexity in there. So we will see. But yeah, so far so good. It just really ultimately depends on the CPI. If CPI comes out hot, this will go up. CPI comes out lower, this will go down. Dollar will likely go down, and the rally will continue after having a absolutely spectacular rally over the past day or so. It's very interesting for me as somebody that makes content daily and of course runs a group, with managing people's emotions, you know. And this is the important thing about being in a group, is having like-minded individuals that have a plan. And ultimately, this is the plan that we've been looking at for a while now, since we reinvested in the markets down here. I'm going to be publishing, once we've got this show on the road and we've started to see that upside, exactly where we've bought as a group in terms of, you know, pinpointing things. So yeah, there's a lot going on. CPI prints. Let's take a look at some estimates. CPI estimates for tomorrow. You've got 5.8, 6, 6, 6, 6. You know, the consensus is really 6. Some coming in at 6.1. But it is looking like a 6. Now, I do think 6 or under will see markets do very, very well. And actually, this is all in the backdrop of the Fed can't be much more aggressive than they are. So there's a real kind of landscape change taking place. This was an interesting article from CNBC. Something broke, but the Fed is still expecting to go through with rate hikes. Markets still expect the Fed to keep pushing up inflation fighting efforts despite a high-profile bank failure. Silicon Valley Bank's the second largest bank failure ever, I think, in the US, that have rattled the financial system. Traders on Monday assigned an 85% probability chance of a 25%. We've said 25 the whole time, guys, despite the readjusting. With the Federal Open Market Committee meeting on the 21st to the 22nd, Goldman Sachs was virtually alone when it said it expects the central bank to pass up the chance to hike rates next week. So yeah, it's Goldman Sachs essentially, and we looked at this yesterday, so they don't even think they're going to hike on this backdrop. Now that could be probable. So realistically, what we're looking at here is continuation here. You know, this is our neckline, the 25K. You break this, guys, you're going to be at 30 plus K. Remember, this head and shoulders target, taking it out of a log. I'll do it for you. Top of your head to your this is going to take you at least up to 35K and then some likely. Certainly, we've already said you're going to fly through this given the sort of low level of volume that's been traded there. You're going to absolutely fly through this once you break out of it. And this is very symptomatic to breakouts, guys, what we're seeing right now. You know, if you look at here, similar kind of structure. Big player taken out, big disaster, or this is like, you know, representative of FTX. Climb, 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 break, retest, consolidate, up. The question is when does that demand destructive event come into play? And that's something we're going to be watching. However, we have speculated for a long time now, which is why we put money in the markets. We wouldn't put money into the markets if we thought that something bad was going to happen immediately. But this is very much how breakouts play out. Now, let's do a little bit of technicals. Let's get on to Bitcoin and the dominance. Let's take a look at Bitcoin dominance, and you can see actually dominance has been absolutely shooting up. And this is, again, symptomatic. When big players put money back into the markets, they don't go for altcoins. They go for Bitcoin because it's a lot more liquid. And you can see this is 2008. Bitcoin dominance typically climbs during a bear market. And you can see that's somewhat been the case. I think Bitcoin dominance continues to roll over time as Bitcoin becomes less dominant, as these sort of smart contract blockchains continue to gain use cases. But you can see by sort of 2019, you know, Bitcoin dominance was really on the run. And then this, of course, led into a bull market. You're about to have the exact same thing essentially play out, guys. You know, you can see as you enter the bear market, Bitcoin dominance somewhat gains. And then as you start to come out of it, you know, Bitcoin's made its rally. As you come out of it, it starts to rally up some more. And then Bitcoin dominance comes down at the point of the bull. So I'd like to see Bitcoin dominance continue to rise. This would be very good. And there are a number of things that suggest Bitcoin dominance will continue to rise and then come down. And your price action is probably going to do something like this on that coming down, because that'll be the real bull market when things will take place. And this is all going into the halving. It's all going, which is next year. It's all, the pieces of the puzzle are all adding up very, very nicely, guys. Now I want to take us over to some pairs. This, of course, was Bitcoin against a SPY. Actually, depending on how you look at this, you know, this is something that we looked at as a breakout. Because we looked at the US dollar, Bitcoin, and then, of course, which actually had a bit of a falling wedge DNA within it. You know, and you've basically just come back. Let's use another chart, guys. Yeah, this is something we've been looking at, by the way. And we're saying, actually, you know, if you're now on your third wave, you've got some monstrous targets for Bitcoin coming up, guys. Resistance, broken as support, looking for upside. And for those Elliott Wave, Ellioticians out there, Elliott Wave, yeah, short-term time frames. Find me somebody that makes money on it consistently and that can actually prove that and doesn't just say they will. And then I'll be a little bit more convinced on the short time frames. But longer-term time frames, it does work well. And if this is the third wave that you're going into, you know, where does this take you? Obviously, a fifth wave would be smaller. You know, we'll see. You know, there's a lot going on right now. Remember, the reason that we put money, or one big reason, was because of this bullish dip. We take these seriously. In fact, it's one reason why we actually said that the 2-year yield was likely to roll in a similar manner to the repo market. Under similar-ish context. Bearish dip. Subscribe to this channel, guys. They don't give it to you like this anywhere else. So, yeah. Lots going on. We'll see what the CPI data reveals. We may even do a video if you guys want sort of covering it and talking about it a little bit more. But ultimately, the consensus is lower. We'll see what happens. There's interesting things going on in the oil markets and other markets. But ultimately, it's just going to be a waiting game for this CPI. Once we get the CPI markets to take a direction, it could be bloody explosive, certainly as you're sort of caressing this neckline right now. If you break this and break it with momentum, I mean, you could have a 30k Bitcoin by the end of March, and this is something that we actually speculated on way back in January, despite how bearish everyone was. Despite how bearish everyone was over the last week, we really kept our chest out and said, look, we're sticking to our conviction, despite the hate. It's not really hate. I understand it, guys, because people obviously don't want to lose money, and if their position's short, they got absolutely killed. But yeah, we will see, guys. It's all about the CPI. Stick to the plan. This plan, if it is this, bear in mind, head and shoulders pattern is a great reversal structure on top of a number of other reversal indicators from the sort of more broader bear trend. There is still risk on the table. However, I love it when a plan comes together. All I've got for you in this video, guys. You enjoyed the content, like, I would appreciate it as a comment. And I'll catch you all in the next one. Thanks a lot for watching, ladies and gents.